Are now joining us. Thank you for coming. I know we didn't give everybody a ton of notice, but this stuff is so timely. We just threw it on the schedule because we thought it was that important. I'm Deborah Gallant from E4All. We're going to let some people get on and then we will get going right on time. I do respect your time. Yes, we all have a lot of time, but we're pretty busy anyway. Ben, what did you do? Did you lock your son in another room? Did you put him outside? Ben,
I'm currently in my bedroom, just so I can eat. The computer is sitting on my bed, and I am just trying to find a neutral background.
And we appreciate you're actually putting a jacket on for us. Thank you.
You know, it's the first time I've had to wear one in 3 weeks, so.
Here's the thing. There's going to be all of this pent-up dry cleaning people have, right? Because there's been no dry cleaners open. It's not an essential service.
Haircuts and dry cleaners.
Lori Mick from the City of Pittsfield is here. Hi, Lori. Welcome. So just so everyone knows, I'm Deborah Gallant from E4All. Ben Lamb, Director of Economic Development for One Berkshire. Ben, do I get to call you doctor yet?
Not yet.
Close. He's getting his PhD, and we're all looking forward to being able to celebrate that, hopefully in person with you. Ben and I are part of the community here in Berkshire County that are keeping an eye on what's going on with small business during this coronavirus craziness. There's no name for it yet, but craziness seems to capture it as well as anything else. And Ben and I were talking almost just last Friday, although every day seems really long, about this new CARES Act and how much information is out there. I was on Senator Markey's call earlier in the week that took 25 minutes to get started, and the audio was bad and people didn't get their questions and they were really angry. So Ben and I said, let's create our own webinar. Now, we are not authoritative. You will see in Ben's presentation, there's actually a content disclaimer. It's April 2nd, 2020, and some of you might be watching this in a recording. We're going to give you the best information we have. We're going to hopefully answer some questions that you have. And thank you, Rochelle, for sending some ahead of time. Because there's been a spate of, it's called Zoom bombing, where all kinds of inappropriate people have done inappropriate things on Zoom. We are using the Q&A function. So question and answer should be at the bottom of your screen still, and the raise your hand function to unmute people one at a time. But we're not going to take questions right away. We're going to get started. Ben has put together an amazing, relatively simple. I know you'll look at it and go, she said that was simple. This is complicated stuff, and we want to try to make sense of it for you and cut through some of the stuff that you may have heard. I learned stuff just in a debrief with Ben about this yesterday. So hopefully we're going to share some of that with you. Let me just introduce myself and E4All. Ben can introduce One Berkshire and what he does there, and then I'm going to hand it off to him. I'm Deborah Gallant. I'm the Executive Director of E4All, which is Entrepreneurship for All. We just came to Berkshire County about 6 months ago, and we run business accelerators, pitch contests, and do everything we can think of creatively to help start and maintain small businesses here in Berkshire County, but also the region, Columbia County, Vermont, Connecticut. If you can get to us, we want to be helping you. So I've taken a leadership role, I think, here in Berkshire County to try to help us all get through this crisis, this craziness. And I'm going to pass it off to Ben Lamb, and then Ben's going to start his PowerPoint, and I'm going to be the needle in his side going, Ben, explain that better. Tell me what that means, and trying to make sense of it. Again, the chat function is disabled, but the Q&A is working, and later on we'll do raise hands if people have other questions they want us to cover. So Ben Lamb, take it away.
Great, thank you. Hello, everyone. My name is Ben Lamb. I'm the Director of Economic Development at One Berkshire. One Berkshire is the regional economic development and marketing organization for the Berkshires. So we wear two hats. We're sort of a unicorn when it comes to the work that we do, in that we bring together the assets and the qualities of a marketing and an economic development organization and bring them together under one roof. So we have been an organization for around 5 years now. We are a merger of several organizations, including the Berkshire Chamber of Commerce, the Berkshire Visitors Bureau, Berkshire Creative, and the Berkshire Economic Development Corp that came together to form One Berkshire. And so we are a fully regional organization. I am in the economic development wing, but we have several different wings, including member services, our marketing and tourism wing, and then our business operations wing. And we all work together to really create an ecosystem of support for the Berkshires. So my day-to-day, prior to COVID-19, we focus a lot on implementing our Berkshire Blueprint 2.0 and running our One Berkshire Jobs thing, which is our jobs portal. But we have a bunch of other aspects that we deal with every day. We do around 250 individual business and individual consultations each year in our office alone. We run a number of programs, and we work very heavily with E4All. So this has been a really great relationship that we've enjoyed. And as of the COVID-19 crisis, we actually pivoted as an organization to become very much so a COVID response organization. So our website oneberkshire.com has been fully committed now to really highlighting what opportunities exist, resources. We are updating a portal literally multiple times daily for the best available updated resources. And we just launched the other day a homebound fun activities portal. So for folks that need a little bit of a break from just looking at the news and business updates, there's actually some fun activities for individuals and families there as well. So that's the 30,000 foot view of what we're doing, though there's much, much more. So do I just share my screen here, Deborah, and then go
Correct.
for it? Mm-hmm. Beautiful. Okay, so let's get into this. Okay, can everyone see my screen?
I can see it, so I have to assume everyone else can.
Perfect. So you already know who we are. Again, this is meant to be a quick kind of overview and discussion and answer questions as best we can. As Deborah mentioned, we're not necessarily the best experts on every little detail, but there should be some quality takeaways. So quick agenda, we're going to go over the CARES Act with a quick 101, talk about the SBA Economic Injury Disaster Loan Program, or the EIDL program. There's a lot of acronyms that are going to be used with these programs over time, so it's alphabet soup that we'll get through. The SBA EIDL program actually has an advanced program component to it. There's the SBA Express Bridge Loan Pilot Program, the Paycheck Protection Program, some other individual aspects that might apply to you as an individual person, but also as a small business. We put together a few little case studies just to sort of give more conversational context to this, and then we'll dig into Q&A and talk about a couple of resources that we have. So as Deborah mentioned, we do have a little bit of a disclaimer here. So quick content disclaimer. The information in this presentation and the discussion is based on our best current available information from the SBA, the actual CARES Act itself, and the reliable independent third-party websites. All of this brought together on March 31st. So we're just putting a date on there so you're aware. Everything shared during this presentation is subject to change, and all individuals seeking support and resources through the CARES Act should seek out the correct professional guidance to do so, including but not limited to your accountant, tax professional, and or a financial institution. Opinions shared during the presentation are those of the presenters and do not necessarily represent the opinions and or beliefs of our organizations. So we just want to be clear with that we're going to speak candidly here, especially when we're answering questions and having more of a chat. But that is really me and Deborah trying to work through this as best we can for all of you.
And I just want to say, I see one of the questions already is that somebody's telling us that they applied for and were denied. We're not the providers. What we're trying to do is make sense of the information. Maybe we can give you some ideas of what you can do, but we're not the authorities. We can't write anyone a check. We are just people who advise small businesses, and we want to help you make sense of how this can work for you.
And to that specific question, I'll also mention that at 11:30 this morning, there is actually another presentation with someone from the SBA. And if you share your contact information with us at the end of this presentation, I can send you the link to that webinar as well, because that's coming up later this morning. So quick overview of the CARES Act. So it was just literally signed into law on March 27th, 2020. And with any of these sorts of packages, not everything goes into place immediately. So there will be some runway between when it's signed and when these pieces actually get implemented and activated in terms of the different rules that they apply to them. I want to emphasize too here that this is specifically an aid and relief package. It's not a stimulus package. So this is really to get through the now, and not so much to get through the 6 months out, the year out, the 18 months out, whatever those look like. There's going to be a number of packages that come through the federal government to support individuals, businesses, organizations, the economy in general, going down the road. But really right now, these are aid and relief packages. So they're structured with several different resources for financial relief for both businesses and individuals. So there is levels of this. There's also, you know, parts with healthcare, and a lot of times these individual components could each be their own bill, but they are put together into what ended up being an 880-page document. So it's a rather large document. I have read it, yes, some of it multiple times, but I'm still not an expert on everything. So again, we are processing this and chewing on it along with you.
This, when you talked to me about this yesterday, the last point is really important. It's really trying to keep people employed, because that really is the backbone of the economy. So when we talk about all of these programs, don't think about them as sort of manna from heaven. These are very specific programs meant to get you as a small business owner not to lay people off, and to keep your own business stable so that there's a business at the other end and people are still getting an income. So just keep that in mind, because that really informs everything about the decisions that Congress made in the particulars of these programs.
And I think probably the best way that I've heard this put is that this is based on retention and continuity. So the goal is to still have that business after the crisis itself has passed, but also to keep as many staff employed as possible, doing whatever they can to possibly stay employed. So yes, to Deborah's point, that's really a huge part of this, and something that will likely come through as we get through the individual pieces. So the first piece here is the EIDL program. And again, I know that some of this will sound like very confusing and very complex, and it is. We're trying to put it into as simple of bullet points as possible from the wide breadth of resources that we're receiving all the time and the stuff that we can winnow out. But just as a basic overview, so all businesses with less than 500 employees are eligible. So 500 is considered a small business, but this includes the self-employed. So I think many people that are on the call are likely in that category of being self-employed or consultants or individual contractors. You're eligible for this program. You are also eligible specifically up to $2 million, and this is specifically the EIDL loan program. So I just want to emphasize that again. There's multiple programs here, which we'll get to. It's based on the amount of substantial economic injury with a 4% interest cap. So they're averaging around 2.75% interest for nonprofits and around 3.75% for for-profit businesses, but the cap has been set at 4%.
And just to put this in perspective, if you walked into a bank right now, you know, before this, you walked into Greylock or Berkshire Bank or Mountain One, and you had a profitable business, you'd still be paying at least 6 or 7%. So this is a below market loan, but it's still a loan, because at some point you still have to pay it back. I just want to make that point.
Yes, that's very important to note. Another thing here is you must have been in business since January 31st, 2020. So if you are someone that's looking to start a business right now, you would not be eligible. You would have had to have been operating since January 31st, which is not that long ago, but it's still something to keep in mind. Collateral is required for loans over $25,000, but not necessarily for loans under $25,000. So there's a number of businesses that might not have collateral to speak of, but might be looking for $20,000, $15,000 to get through this period. That's important to know, that the collateral might not be required depending on how it ends up playing out. Approval can be based on the credit score. Were you saying something, Deborah? Oh, sorry, I heard something in the background. So collateral, yeah, so there is some flexibility here when it gets down to the actual approval process in terms of what they might require. It might not go as deep as most SBA loans do. So anybody who's familiar with that process, there's a lot of paperwork generally involved. This program has attempted to be more streamlined, which will all play out more so once the rules and regulations really get issued, which that has not fully happened yet.
So wait, they announced this, but the particulars of it aren't, and you can apply right now, but the details aren't available. Is that what you're saying?
That's what I'm saying. So I think that they have rough guidelines that are built into the legislation itself, but there's likely going to be some challenges. I mean, there's capacity limits in terms of this stuff. You know, the federal government doesn't have an unlimited supply of employees working on this. So even though they might set certain timelines or they might have certain aspirational expectations, there's always a chance that those might not fully come through. So it's understanding that there's a lot of potential flex here. The basics, you know, when it talks about the number amounts, you know, when you would have had to have been in business, all of that is pretty hard set, but there's going to still be some flex in a number of aspects here.
So if for instance, the person on the call who says that she's already been rejected, if approval can be based on credit score alone, potentially she was rejected just because she had a low credit score, because they couldn't possibly have really looked at and researched her application. So maybe there's an opportunity for either this program again or a different program. Am I?
Yeah,
Maybe?
I would agree. And I would say, you know, this program is one of them, and it allows you to apply online. Most of the other programs will have you actually going through your financial institution. And for folks that are having challenges with this particular application, I would actually suggest talking to your financial institution early on. Even if the other programs have not fully yet rolled out with them, they should be able to help you navigate a little bit more. Because I've also had folks that have tried to submit through the online portal, and just technical difficulties have failed it, where, you know, they either get a 404 or some other form of a, you know, failed link attempt, specifically for Massachusetts, which is interesting. The folks that we work with are all in Massachusetts. And so that has been something that has been raised as an issue. And we're trying to also figure out what's going on there. And I think, you know, all these systems are being taxed to the max because this has never been seen before. So that's just another piece to be keeping in mind, is that this is, you know, unfamiliar territory for everyone.
Okay, and I just want to come back to one of these bullet points is about what you're supposed to use this money for paid sick leave, payroll, rent, mortgage, utilities. What's really critical here is not every small business has been tracking these things very effectively, but unless you get your books in order to be able to fill out this form, almost certainly going to get rejected. So it might be that you need to use this downtime to actually get your record keeping in order so that you can qualify for this, because you probably were paying all of this, but you might not have been accounting for it in a way that makes it easy for the SBA to understand.
Yes, and I would say, like, even beyond just keeping your back records clean, keeping your records going forward extremely well regimented is going to be what makes or breaks a lot of this for folks. When we get to some of the other programs here, which we'll dig into, those programs might have some forgiveness associated with them, but that's only if you can fully prove how the money was spent, when it was spent, all of that. And so if you're not keeping good records, you're going to potentially fall into a trap there where what you expect to be forgiven won't actually be eligible because you can't prove that it was spent correctly. So to Deborah's point, absolutely cleaning your existing records, making sure that they're, you know, very well structured, and then also going forward, having a really good model for tracking is going to be a really important piece. A couple pieces here too, just on that same line that Deborah just was talking about. So the increased cost of materials and then the obligations unmet by the new revenue level. The new revenue level is based on year over year. So depending on how much of a loss that you're seeing this year compared to past years, if you have certain obligations that you cannot meet right now because of how much your revenue has dropped since last year at the same time, those are also pieces that can be paid with these loans. So that's the stuff that can be. There's a lot of other stuff that can't be, but we just want to touch about what could be.
So I want to say the big, I'm seeing lots of Q&A coming in, and we will address much of it in our case studies and in the Q&A at the end. This is the online application. And honestly, you open it up and it looks like, oh, this is going to be a breeze. It might not be the right thing to do. So just be careful. And it might not be as much of a breeze as you think. So I don't want to go into it more because this is only slide 3 of 15. So we need to keep moving on.
And we will. So part of the EIDL program is also an advance. Again, there's a lot of different numbers put out there: 10,000, 25,000, 2 million, you know, all these different numbers. We're trying to keep these as straightforward as possible here. So the EIDL program does allow for an initial grant of up to $10,000 available within 3 days of your SBA application for an EIDL loan. So you still have to apply for the loan, but you're eligible for an advance of $10,000. That amount can be provided regardless of if your full application does get approved. So even if you, in 5 days, 6 days, you find out that you got rejected for the SBA loan, you could still have received that $10,000 within 3 days. And as far as the legislation currently says, it does not have to be repaid. So this is just something to keep in mind, that it's not based on what your eligibility ends up being in the long run. It's based on your initial application process.
So it doesn't have to be repaid as long as you're using it for that list of things that were on the front page, right? It's not again, like if I shut my business down, so I'm not spending money on rent or employees or anything, I can't just get the 10,000 and keep it, can I?
No. You have to actually use it for the expenses that the loan requires. So if you can't prove that you've done that, you will owe that $10,000 back.
Okay.
So, and again, this is all part of the EIDL online SBA application. So that's just that's one program. Now we're moving on to another one. So trying to draw some lines here. So there's the SBA Bridge or Express Loan Program. It's had a couple of names depending on where you live in the country. Bridge, Express are both names that have been used. So we're going to use both in this. So these are up to $25,000. They're express loans, specifically during a presidentially declared disaster, which we are currently in. There's no collateral needed up to $25,000, but it may be required over $25,000. And this is going to be case by case. And you are going to work through this with your financial institutions. So this is not an online application. This is through your financial institutions.
I just want to make a point that we, Ben and I, made the effort yesterday to go to all of our local banks. So we've talked to Greylock, to Adams Community Bank, to Berkshire Bank, to Lee Bank, to Mountain One, to Pittsfield Cooperative Bank, and I even checked in with Common Capital, and they all are participating, but they really want you to start with the people you already do business with. Don't try to go to a new bank at this point. If you are already have a relationship with a bank, that's where you should be starting on all of these.
And that's especially important for small businesses, because they're going to know you more than a new bank will. And that's really going to be an important part of the conversation on any of this, because they can also help you navigate which is the best option. Because an important part of all of these, as far as anyone can tell, is that there's no duplication of loans. So you cannot take multiple loans to pay the same theoretical expenses and then use the same records to show that you paid for those things. So you're really eligible for one of these things, which down the road might be transferable into a more traditional loan, but that's, again, the rules have to really be established here. So that's just really important for anybody. So even before you necessarily fill out the online SBA, talking to your accountant or someone in the financial field that you have a relationship with is going to be an important first step to take no matter what. So these loans, the SBA bridge loans, are up to $1 million loan cap with up to an 11.5 interest level. And I know that sounds like a lot, but this again is more of a traditional loan in terms of the interest rates, but it's meant to be expedited.
But Ben, how can they have an up to? Don't they know what the interest rate is? Is it a variable rate loan? How does that work?
It's variable, just the same as any loans that you take out, and it's based on a case by case. So, what is your credit score, or your, past liabilities, or do you have any delinquencies that you've seen historically? It really goes into your history as a business and or individual if you're more of a sole proprietor.
All right. So it's administrated by Greylock or Berkshire Bank or whoever my local bank is, but it's really money from the SBA.
Yes.
But they're the conduit for it.
They are, yes. So they are the ones that are essentially going through the applications and deciding what the eligibility fits, and then what the kind of interest rates most likely should be. Just like any loan that you might have gotten in the past. Usually, you've gone through, unless you've done, some online platforms, which I wouldn't necessarily recommend, going through your local lenders and local financial institutions is what you normally do when you're taking out a loan. And through that process.
But a lot of businesses have never had to borrow money before. They've been able to grow organically or go off of the owner's savings. So this might be all a brand new, brave new world for them.
Yeah. It very well might be. But if you have, even if you have, let's say you're an individual and you just have a personal account with a bank, start with that bank. You shouldn't necessarily jump ship for a business purpose to another bank or another financial institution. Even if you've only had to have an account with a bank as an individual and never as a business, in terms of taking out debt, start with those folks again, because they know you as a customer, they know you as an individual, especially with local banks. I think that that's an important piece.
I also think we need to share that we did hear from our banker colleagues yesterday when we were investigating this for this webinar, is that I think one of them said he's under siege, that, you know, the number of incoming calls to a single business banker who doesn't even know the rules yet because he can't get the SBA on the phone to ask them the questions. No one has all the answers right now. And anyone who says they do is, I think at this point on April 2nd, is blowing smoke, because it's this was just passed last Friday, less than a week ago, and some of it hasn't even gone into effect yet. It's crazy.
Most of this has not gone into effect yet. Again, so that is a very important thing to keep in mind here. With this particular loan program, you do have to have been in existence for at least 2 years, proven existence. So it can't just be, you know, theoretical existence. So you have to have been operating for 2 years, which is longer than the prior one that we just talked about, the EIDL. You must prove that you need the financing and that you have an ability to repay. And this really focuses on having no delinquencies on existing loans, especially federal loans. As we've kind of harped on so far, it's offered through local 7A banks. That's really going to be most of your banks, lenders, and credit unions. They will be the conduits to access these funds through an application process. They have initially a pretty firmly designated 36-hour turnaround time. So you should know within 36 hours if you've gotten these based on the current legislation. Again, talk about flexibility, capacity limits, all of that. Those are barriers and kind of speed bumps that are going to be hit as this actually gets activated on. But that's currently what the legislation identifies. There is a guarantee fee associated with this loan. So with most loans, when you apply, there's a fee associated with it. When you take it out, it's kind of like a personal skin in the game, I guess you can consider it, that is associated with paying for that loan processing. That is, if you are a veteran-owned business, there is an exclusion there where the fee might not be required. So that's just kind of a nuanced piece to keep in mind. And this particular program is a longer running one at this juncture, where it actually is planned to be operationalized all the way through March of 2021, where a lot of this stuff is really currently, it might get extended, but currently planned to end in December of 2020 in terms of when you can apply.
This looks like one that you might look at for after the first wave if you're still closed, you're still in need, because this one is a longer term one, but with that higher interest rate, it might not be the first place that you would go.
Right.
Okay.
Now drawing another wall, now we're into the Paycheck Protection Program. So this is another facet of it. And this is actually probably the furthest along when it comes to actually being operationalized. So as of 2 days ago, when we collected this information, or most of this information together, this is planned to be active on April 3rd. But it's retroactive to February 15th. So it allows for you to account for some expenses that, again, this is why having really well-structured books is important, right? Because this goes back to February 15th. And this really, digs into that piece of trying to keep people employed and retaining staff. So all businesses with less than 500 employees, again, are eligible. And there was specifically $349 billion allocated for this particular program component, which is quite a large chunk of the 2.2 trillion that was put together. Each individual business is eligible for up to $10 million at a 0.5% interest rate. So this is an extremely low interest rate. It's, again, distributed through the same lenders, banks, and credit unions. This is not an online application. You are going to go through your financial institutions for this. Approval can actually happen same day. I think ideally that's what they would like to see. The reality of that, again, we have, only so many financial institutions and so many businesses that are going to be seeking these funds that there might be some lag there. And that's where I know it can be extremely challenging. Having been a business owner myself, the waiting game can be very challenging. But that's just something that we all sort of have to be ready for. But it's meant to help businesses with payroll and operating expenses very specifically. So it's not requiring collateral or personal guarantees or SBA fees. And this is a very rare instance where 100% SBA guarantee has been established for this fund. So it's fully backed, right? All the money's there, up to that $349 billion line right now. Payments are initially automatically deferred for 6 months. Again, this is a aid and relief, not a stimulus. So this is to get up to that 6-month line. That could be extended, who knows? There's a lot of ifs, ands, or buts out there. But the biggest focus of the Paycheck Protection Program is the first 8 weeks. So this is the first 8 weeks of payroll, rent, utilities, and mortgage interest. And the reason that it's focused on that is because as long as all of your documentation and all your paperwork and everything structures and aligns with what is needed, that 8 weeks of the expenses that you use the loan for will be forgiven based on what the legislation says.
So Ben, one of the questions that I saw come in, and it may be that you and I are not qualified to even field this one, is if you applied for EIDL, because that looked like the urgent, I can go online and apply for it, but this Paycheck Protection Program looks like a better program for you. Can you withdraw one? Because you said there's no double dipping, right?
There's no double dipping, but just because you've applied for a grant doesn't mean you have to accept a grant as well. So I'm not the 100% expert on this, but my feeling, just like with anything. So if you go, when we were a business, we went to 3 different banks and we applied for loans with 3 different banks and we got offers from 2. That doesn't mean that we took 2 loans. That just meant that we got, offers on 2 with, all the requirements, and we decided on the one that we wanted. So I think my guess, and again, this is a educated guess, would be that very similar to that process, if you apply for one, but you do not accept that one and you accept a different one, you'll be fine. It's when you actually get money in hand that it becomes no duplicative taking of dollars from the federal government for operating expenses.
So I think when people see both of these, and the first one looked like it was much more immediate, right? I could do it now, I'll get my $10,000 lead. They may have applied for that and then looked at all of these and go, this one is a better one for me. So if you haven't accepted the money yet, it might be time to stop and pause.
Yeah, this one too, the EIDL program, it had those other 2 pieces to it, which included the increased operating expenses, especially due to supply chain issues, and also the inability to pay current delinquencies that you would normally have been able to pay if your revenue was the same. Those parts are not part of the Paycheck Protection Program. So, if those are pieces that you really do need to be built into your loan, then you may end up wanting to stick with the EIDL. But if you're really focused on payroll, rent, utilities, mortgage interest, then the Paycheck Protection Program might be better for you. I'm not going to tell you one way or the other, period. Like, I'm ending that sentence there. So I would seriously and continue to say, check in with your financial partners, whether that's your accountant or your lenders or your bank, credit union, whatever the case might be, to really get a grasp on how this could impact your specific situation, because everything is case by case. I can't use broad strokes, and we're going to try to do some case study stuff here at the end, but I don't want to make any assumptions for anyone on the call.
We have some great questions sitting in our queue, so we'll hopefully get to them all.
So tax provisions. So this is some stuff. This is very jargony. I'm not going to dig too into depth here. So there is a net operating loss carryback, which can go all the way back to 2018. Please, again, look into this with your accountant. I am not the expert on tax provisions, but this is something that might be worth you bringing up when you talk to someone. Yeah.
I'm going to actually, I think, ask you to skip this with one proviso. And I know, because we just have so much to cover.
Yeah.
What this tax provisions, because Ben had to make it really clear to me yesterday, is the government is saying some of the taxes that you owe to us, we're going to forgive or let you wait to pay so that you can keep that money right now. And that's in all of these things, right?
Yeah, again, it's about letting you retain as much of your capital as possible right now, especially since so many small businesses are cash reliant and really need to, as we all know, right? You need to have those dollars in hand right now, and it's coming in as fast as it's going out in a lot of situations. they're trying to make it as easy for you to hold on to as much capital that you would normally be paying out in taxes as possible. And they're providing the loan program. So it's sort of two different layers of support that they're offering.
All right, why don't we move to the next one? This is really complicated, and if we got stuck there, I think we wouldn't get through all of it.
That's
so
totally fine.
Keep going, Ben.
So I'm going to blaze through some other aspects of this. So the rollout timeline, again, still fluid and evolving. More legislation is expected. I think we're on either Act number 3 or 4. I heard a legislator say that they're thinking that this is going to go to Act 7, 8. All focused specifically on the COVID response. So that's just something to keep in mind. Again, no double dipping. This is extremely important. So making sure that when you decide that you're going to accept a loan offer, that you are accepting the right one for you. Significant funding has also been put towards healthcare and telemedicine, which could be really important for folks, especially if you didn't necessarily have health insurance, or if your health insurance was fairly limited. The telemedicine piece is huge because that has not historically been incorporated into the healthcare system as robustly as it is now. This 401k distribution rule relaxation could be really important for folks that do have a 401k. This is, again, the government kind of relaxing some regulations that historically had prevented people from drawing down on their retirement funds in any robust fashion without, they would have to pay, certain, I think 10% fee on whatever that is.
So I think what the government is trying to do here is said, we're going to make it easier for you to help yourself here by taking away the interest and penalties from drawing down some of your retirement funds early, if that's what you need to do now. Now, it might not make sense for you to do that, but if that's a source of funding for you, they're not going to penalize you for going there to pay your bills.
Right. So that can be really helpful. Unemployment insurance. So this is, this has been expanded. So it's usually been about 50% of someone's pay when they get put on unemployment. They've added this $600 per week piece to the legislation. I'm sure folks have been kind of hearing a lot about that. This is still not yet rolled out, though. So if you're applying for unemployment right now, it's not this program yet. We don't exactly know when this is going to fully launch, but that is something to be well aware of, that if you are applying, you're not going to see that $600 piece until they fully integrate this program into the unemployment insurance across the country.
And the people who are, I'll call them in the gig economy, who are solo entrepreneurs, sole proprietors, and are supporting themselves, consultants, writers, whatever, freelancers, the unemployment insurance expansion, which everyone's been talking about, they're able to apply for the first time. It's not so yet. It will be, or at least they say it will be, but there's a huge unemployment number just reported a couple of hours ago. Didn't even include them because they're not really eligible yet.
Right. Yep. There's still, again, a fuse there that hasn't played out because, again, this was all signed on Friday. Another piece here, a lot of folks have school loans from college through the Fed. Those have officially now been put into forbearance for 6 months, so up through September. They've sort of automated that system on the back end with the federal loan system, so that's already happened. There are other aspects of the SBA loans that if you have existing SBA loans, there can be a forbearance there as well. I don't know too much of the detail on that yet because it hasn't been fully explained in any robust fashion that we could find. But the school loan piece is already in place. So if you have loans, you should see that through your online login portals. The recovery rebate program. So this is where the government is really looking at the individual, not so much the business. So it's very specific language, recovery rebate program. So this is an advance on your tax return for 2020. So just like when you filed your taxes this year, in theory, you'll see a return. This is basically a payday advance on your return for next year. So
this is so important, Ben, because I have to tell you, I brought this to my dinner table last night, and I have 3 really smart people who have dinner with me every night. And I said, the $1,200 check that's going to show up in your account, that's really just an advance on your tax refund. And they're like, no, that isn't true. That can't be true. I'm like, yeah, it's true. So don't think that the government is just handing out money to make this go away. They're not. They're basically saying, we'll give you an advance because we think it'll help you pay your bills and keep the economy chugging along. So don't think about it that way. And that was a real aha to me. And I know it's not specific to this small business talk, but when you told me that yesterday, I'm like, I don't think anyone knows that.
And I was caught off guard a little by it myself when I dug in a little bit deeper to the language and looked at a few lawyers' descriptions of it. One of the important facets of this, though, is, if in the end you end up that they still owe you more than what you get now, you'll still get that next year, that the remainder. If they gave you too much money now, there is not currently a plan for a clawback. So if, let's say, in next April when you file, you're only supposed to get $1,000, but you got $1,200, there is not a plan to claw back that additional $200 from you when it comes to the end of tax season. So that's just something it shouldn't terrify folks that they're going to have to owe a lot of money suddenly at the end. But it is important to know that you shouldn't really expect that big check, well, quote unquote big check, next spring when you file your taxes for 2020.
What if you always owe? Then will they still give you the $1,200 and you'll just owe more?
That's a good question. I don't know.
Thank you for the question, Shannon. We don't know the answer.
I wish I could be an expert in everything.
All right, so we're going to take your questions. I have 16 of them sitting in the queue, but Ben and I are going to spend just 3 or 4 minutes on each of these examples, talking them through, because we thought it would illustrate a bunch of things. We created sort of an avatar for a kind of a business that we might see here in the Berkshires and said, how do you think they should go after these programs and make sense of them? And we'll just talk about them very briefly and leave plenty of time for all of your questions. So the first one that Ben came up with is Joe Restaurant. So you guys all know who Joe Restaurant is. You've seen him on North Street. He has a delivery operation. Used to have 10 employees, down to 3. His bills in an average month are $5,000 with a $1,000 payroll. So Ben, which program makes sense for him?
Well, we have a few things to look at here, right? So it is currently an operating business, so he's not fully shut down. So when we look at sort of what are the most important aspects for Joe Restaurant, it may be that the most important thing is keeping his staff employed, the ones that he can keep employed for the delivery operation. But then also looking at how do you make up those bills that you wouldn't necessarily be able to pay. So just from my quick perspective on this particular one, I would probably think that the payroll protection is the most logical one, because it allows for coverage of those, most of the monthly bills, whether it's, rent, because he doesn't own his building, or at least we didn't identify that, utilities, and then being able to pay the employees, at least. And then with that too, that gives him the 8-week runway. That is the forgivable amount, as long as Joe is keeping quality books.
Okay, so that's what we think Joe should do. Our next case study, Jill Consulting. Jill is who I was before I started working for E4All. She works from home or a co-work place. I won't tell you if that $60,000 income was, this is Jill's income, not mine. But since March 15th, business dried up. There's nothing else. No one is calling. Nobody wants to do any business. No health insurance. I do have health insurance, but she does have a 401k and an IRA. Where should Jill be going? Because she can't apply for unemployment yet, right?
Right. So with this particular one, she might not want to take out a loan. She may want to look specifically at some of the federal relaxation of rules, specifically because she has a 401k and an IRA. There might be an ability for her to draw down as long as she's got those well enough capitalized. And with those, you can either do a permanent drawdown, which is a little bit more detrimental in the long term, or you can do a repayment drawdown where you end up actually paying back into it over a 3-year period based on the new regulations. But it really will depend on how long Jill thinks that she's going to be able to sustain, based on what she's got in any sort of reserves. But that's just my thought. I don't know. What do you think, Deborah?
Well, I think that because now people who are solo entrepreneurs do qualify for some of these business things, she could have payroll protection for herself, but she'd need, qualify under payroll protection, because she's her own. If she was taking full payroll before, she'd be taking payroll now.
Yeah, it's a really good point.
Yeah. We're making this up as we go along, people. So be sure we're trying to make sense of it for you. Okay, number 3 is Pat Furniture. So this is an office furniture store, not open for business since Charlie Baker closed all the businesses and put all 20 employees on some kind of full or part-time furlough. Bigger bills, average monthly bills of 15 with payroll and benefits. And Pat owns the building, which means Pat may or may not be getting some rent from some tenants who may or may not be able to pay. Wow, this feels like a bigger project here, Ben.
There is a lot here. So I think we can kind of break this down piece by piece. So, Pat owns the building. So there is some collateral there, which in theory could allow for a larger loan if they were seeking that. There's also likely some tenancy beyond what Pat's Furniture is taking up if they own the building. I'm making a bold assumption there. We have a lot of bills and we have a lot of payroll and benefits here. These programs could help to keep those employees on so that they don't go off and seek other employment during their furlough. With that 8-week piece, that's a decent runway that we could hope that after 8 weeks.
But what do I do with my people? Even if I take them on part-time, they all work 20 hours and the government's helping me pay for them. I can't sell anything. What do I do?
Well, a lot of smaller businesses that I've been speaking to, and I will say that specifically the ones that have opened up about this have been more in the restaurant industry, is they're doing improvements on their buildings that they can do with staff rather than having it, it's not like plumbing or electrical work. It's, painting, it's cleaning, it's reorganizing, it's building new marketing plans, it's doing design work, using sort of the skills that employees might have inherently that they haven't used as a sales employee, but they could use as a, someone who's really good, has a really good eye for design, or has a really good mind around new marketing campaigns that they can roll out after all this comes to a head. And also just thinking creatively on, yes, a lot of physical storefronts are not able to sell out of their storefront, but businesses that do a shipping sales process are still able to operate to a certain extent. One interesting example I saw last night is there's a record store that did kind of a QVC on Facebook selling records, and it was like a bidding process using Facebook Live. And it, I don't know what the total revenue will end up being at the end of that, but it was really fun to watch. And it was an interesting way of still selling their wares in a way that they could ship it out to people. So again, using that employee, that workforce to...
No, it might be the time to conquer e-commerce and social media for somebody who was a little bit of a curmudgeon about it. And here's the other thing. I think that when you work with your financial professional, that there may be some combination of putting some of these people on unemployment because they'll do better, keeping some of them on furlough, but there's each organization is going to really have to tackle what that means for themselves and for their employees. And it's very hard to say one size fits all, because in this case, it absolutely does not. I also want to just make a point. When Ben and I were just talking about this, all businesses and categories and industries are not being treated the same. As far as I'm understanding it, Ben, and you could tell me if I'm wrong, I don't think farms are included in any of this. Is that right?
As far as what the current language says, that's true. And when you talk to folks that are responsible for really building this legislation and rolling it out, there's more talk about what further bills will look like to support other industries. So another one that's going to see potentially a big challenge is the Postal Service. Their timeline for they're seeing significant losses right now, and that's just going to continue. And unless there is some support from a federal bill, and they're not currently eligible for what was just rolled out. So that's another case where, I think agriculture, or most of agriculture, and the postal industry are two examples of businesses that, we would hope that and advocate for too, that there would be support for those types of businesses going forward.
Okay, I want to get to the questions. So why don't you move? I think the next slide is questions. Yes. Okay, so I'm going to read some of what we have. I've already applied and denied. What happens now?
So I think we I don't know if we touched on this enough before, but I think one, talk to your financial institution if you have not already had that conversation. That would be a starting point. I'm going to say that period. That should be a starting point for most people. Again, even if you haven't taken out business loans before, talking to your bank or financer that you use as a person, as an individual, would be the right first step.
Okay.
So that would be where I would say, that's what I would say. That's just me though.
And Shannon asked the question, which I believe we answered. I completed the EIDL application quickly. It barely asked for info. I think the payment protection program makes more sense. So you're just saying don't accept the payment, right?
Again, I'm not a lender. I do not work for the banking industry in any way, shape, or form. My suggestion would be to talk to them to make sure. But I believe if you have not accepted the loan, then you do not need to be worried about the duplicative issue. And it very well may be that the payroll protection is better for you.
Yeah. What do they mean by obligations unmet by new revenue level? Or is that not yet clear?
So that was me trying to use fewer words to describe something that's a little bit longer in the actual legislation. What that really means is that if you have certain obligations, so for instance, a bar might have a liquor bill that they have to pay, or they will be blacklisted by the distributor, which basically means that you won't be able to purchase beer, wine, alcohol, even when things do get better. If you are not making enough revenue right now, year over year compared to last year, so if you've consistently not had a quality business, you're going to have different issues here. But if you historically have been able to pay those bills based on your revenue, but now you can't because revenue drops so significantly, that's where these funds are able to be used. Again, a big reason why having really good records year over year is extremely important.
If you have a small business and you also work a part-time job, so you are still working, can you apply for an EIDL loan since using the part-time job money to pay for food, et cetera, for yourself, you can't use it to keep the business going?
It's a good question. And I think it would probably depend on if you're just a sole proprietor, or if you have an actual business ID. Because the business is technically not you, it's its own thing. And so that would probably, and this is me kind of taking a shot in the dark, that would probably be a determining factor in what your eligibility would be. But again, talking to your financial institution would be a good first step to get that sort of navigated in terms of what's you and what's your business, and can you continue to be employed, but then also get the support for that, since you are going to have expenses associated with a side hustle, even if it is just a part-time business.
I have two questions that are very similar about payroll protection program. Is the loan based just on payroll, or can it include utilities and mortgage?
That particular one does, I believe, let me go back to that slide, but I am pretty sure, yes, rent, utilities, mortgage are included in that. But it does not include those special pieces of the EIDL around increased costs based on supply chain issues, and not being able to pay regular obligations because of a revenue change. Those pieces are not part of the Paycheck Protection Program, which is one of the biggest differentiations between the two.
One of our participants said she's answering her own question. It seems as though there is the potential to roll the EIDL grant 10K into the PPP loan. So that's great information. So thank you for sharing that. This is all changing as we go along. If you're a freelance gig worker, should you wait to apply for unemployment insurance until it's officially rolled out, or should you go ahead and apply now?
I've seen, so this is another one of those situations where there might be some conflicting opinions on this. I did see recently a legislator say, wait, if you're in Massachusetts, I'm going to say this as a Massachusetts person. If you're in Massachusetts and you can wait for the new plan to come into effect, it's suggested that you do. But I've also seen people say get into the line as quickly as possible, because it's, there's so many people going into it, and there's, timeline lags, and people that have been applying for multiple weeks and have had challenges with the system itself. So I don't want to give you a direct, I'm sorry that I can't give you a direct answer on that, because I don't want to necessarily steer you the wrong way, but I've heard conflicting reports, and you may want to directly contact the UI. They have 500 people now working remote for unemployment in Massachusetts. So they do have a lot of people that are on the phone nonstop answering questions, and it might take a couple hours to get your call through. But I think it'll be well worth taking that time and doing it the right way for you, rather than making a step in the wrong direction and then having to backtrack later on.
Okay. Casey, I know you're administrating this call for us, and I didn't introduce you before. Casey O'Donnell, our program manager at E4All. I do see a couple of raised hands. Do you want to see if Gail wants to ask her question herself?
Absolutely.
Gail, you with us?
One second.
This is testing our technical ability.
Hi, Gail. Just going to want to unmute your mic.
Hello.
There you go.
Hi, thank you so much for this. I'm the one that asked the part-time job question about working part-time and having a small business. I am a sole proprietor, so I just thought, I didn't understand what you were saying when you answered it. So I wanted to clarify that I am a sole proprietor, and can you give me any more information knowing that?
So I know this kind of feels like a cop-out on this one, but talk to your financial institution because I'm not sure if they're going to treat you as a business differently than they treat you as Gail. So you really want to make sure that you are not crossing any legal lines in terms of what's your legal designation as a business and what's your designation as a person who has another job. So I definitely check with your financial institution.
Okay, all right. Thank you.
Thanks, Gail. I also want to make a point, and Ben is going to probably get mad at me for raising this. We here in the Berkshire County area who work in business development understand that this is really complicated, and you may feel like you're in over your head in terms of making smart decisions, and you might not have that trusted financial advisor, bookkeeper, accountant, lawyer who gets all of this. We are trying to assemble a list, and hopefully within the next week or 10 days, you'll hear more about it through the One Berkshire website and through E4All, of some volunteer, I'm going to call them mentors, smart people, financial people within the community who can potentially assist you in understanding your situation and how you can get your paperwork in and get some, literally some technical assistance. It's not done yet, but we're really clear that having one-on-one attention to help you make sense of these programs and how to apply for them and how to get your books in order so that you can apply for them makes sense. And that this webinar, though we're glad to have helped about 40 of you who are on it, isn't going to answer everybody's question. And we're certainly not, Ben and I are not logging on to do your paperwork with you. As much as our heart is in the right place, that's not what we do. So we're going to try to find people in the community who can do that. So stay tuned for that information. Casey, do we have any other hands still raised, people who want to ask questions?
There aren't any current raised hands. If anyone would like to use that function, I will unmute them and you'll be able to ask your question or expand upon a question you put in the Q&A earlier.
Okay, the other thing that I just want to tell you is that we have recorded this session, and I know that, if you have another partner or somebody in your family or that you just want to be able to share this information with, you can do that. Rochelle, I don't want to forget your question, which is that she's in a seasonal tourism business, and she wants to know, where's the long-term help in all of this?
So, I know I've said this a few times, but I'll say it again. This is an aid and relief package at the moment. This is not the likely stimulus that we will see going forward. There has been at least peripheral talk that I've heard at the legislative end of things around another bill phase in April or early May that will hopefully start to address that long-term financial component from a federal level. So that's to say is that this is just this phase. And this is a lot in 880 pages, and there's going to probably be another several 8,000 more pages that come along in other bills and acts that get put into play to address COVID-19 and its long-lasting impacts on both the regional and the global economy. But right now, I think that that's where it's at. And while a lot of grassroots efforts are happening within communities and within regions and states, there will still be multiple phases and chapters to what comes out of the federal side of things. This is just the one right now to get through this moment. This is not meant to be the long-term fix for everything. This is meant to be for now fix, or for now kind of support.
Ben, can you just move the slideshow along? I just want to point out that we know that there are so many more questions and so much more information that you feel you need. So One Berkshire has an amazing portal that they've put up that puts every resource that you could imagine up there, obviously the authoritative and correct ones. And E4All is doing webinars like this one multiple times a week, and trying to create a body of information and support to help you through this. We're actually doing one next Wednesday. I'll just pre-promote it, on pivoting. So how do you change what you're doing on a dime to make it work? And Shannon Ashcroft, if you're still on the call, I give you a thumbs up for going from having an in-person yoga studio to teaching online. You're a perfect example of how I think we all need to be creative and innovative. So those webinars are now archived on the E4All website. We do new ones all the time. Ben and I are going to stay in touch on this, and if we need to do more of these webinars, we will do them. It is just about 11 o'clock. This was recorded, and we'll make the recording available probably on both of those pages. Ben, you have any parting words? You were so terrific making all of this understandable for our audience.
Well, thanks for working with us here, Deborah. I think that, this is one of those situations where, especially in the Berkshires, we're really good at collaborating, and this is going to be one of the vital things going forward. Within the business community too, collaborating with your friend and neighbor businesses to really kind of come together in these times is going to be important. One other piece that I'll mention too about our portal. So we have our COVID-19 response page. Our whole website has really been revamped in the last week and a half to be as responsive as possible. Another piece that this week we just started to build in is we are now aggregating webinars that we're hearing about. And so we'll be having that information on our website. So if you're looking to see what webinars might be out there from other sources, not us, not E4All, but just other sources that could be of value to your particular needs, be sure to check back. I've been telling people, just like you might check the news on a daily basis, check back to our One Berkshire COVID response page on a daily basis, because there's likely to be some new important stuff on there as well. But thank you all. Again,
thank you all for joining us. Thank you, Ben. Thank you, Casey, for running the back end for us so efficiently. And I'm sure you'll see us again with more information as we find that we need to present it to you. We'll be back. Thank you all for coming. Bye-bye.